Welcome to ShortView Trading, your morning market hit for Friday, August the 13th. What matters today for traders? Well, what a fascinating week it's been as the market's fallen into that classic kind of August trading pattern, the summer lull, the grind higher that we've seen over the course of the last week. Friday last week, the S&P broke out of its consolidation range, and since that time, it's really been eking out daily gains, daily positive upside moves of 0.1, 0.2 or 0.3% on the day. Small gains, classic of that grind higher. Alongside that, of course, you've seen a collapse in volume in markets and also volatility coming off. Volume, for example, if you look at the S&P mini contract up in front of you now, is way below seasonal norms, which are light anyway in August, way below those kind of volumes that we see in markets. And equally the same kind of message if you look at the NYSE single stock daily traded volumes back at one of its lowest levels in the last 12 months, really only equaled around Christmas time last year over the course of the last year. So volumes are low, volatility's come off, and markets are eking out small gains. So what does this mean for markets? Should we heed the old market saying that you should never short a dull market? Or indeed, is there something more troubling out there, as a lot of the commentary seems to be alluding to? Yes, a bunch of them are quite high levels, they're above neutral, but they're clearly not on sell. So take, for example, the S&P 500 technical scoring system we're putting up in front of you now. Moving higher, but not on sell. Equally, if you looked at a number of other models, for example, the risk appetite scoring system, again, not on sell, or the combined RAG1 and RAG2, again, not quite on sell. Added to which, if you look for signs of market excess, they're few and far between. Yes, valuations are high, but they're not good for timing markets. If you look, for example, at the percentage of single stocks that are overbought, this chart we're putting up in front of you now, you'll see that most sell-offs in the last 12 months have been preceded, or most market wobbles, if you like, or sell-offs have been preceded by a sell signal from this model. Signs of excess in terms of a high percentage of single stocks that are overbought, 30, 35% plus, that sort of level. Clearly, we're not there at this moment. Other signs of excess, equally not there. Put to call ratio shows plenty of downside protection in portfolios, and so on and so forth. So overall, therefore, the grind high looks like it's probably going to continue. And indeed, to see how we're playing this market, please see today's Daily Rag, available to subscribers via the website. Or if you'd like a free trial, please sign up and click on the link below for a 7-day free trial of the Daily Rag. All you need to do is enter your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. So what are we watching today? Well, it's pretty light in terms of data. The key data point out today is the Michigan sentiment, consumer sentiment, out at 3 p.m. London time. The headline indices and the detail there is pretty interesting as well. You also get some take on inflation expectations. Other than that, it's really quite light. Naturally, there'll be a focus on price action and whether or not that grind higher continues and volatility continues to collapse further. So that's it from us. That's your morning market hit for Friday, August the 13th. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading and click the subscribe button, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.